Welcome back to my channel, guys. Hope you're all doing well. In today's video, what I want to cover is a super mechanical entry model and a super mechanical way that you can get involved in the Forex markets. I've featured this entry model on my channel once before, and it's one that I do really like, and it's one that I think that could take, if you're struggling, I think it could take your trading to the next level. And it's one that I've utilized personally, and I just want to start off by saying this works both with supply and demand. It works with liquidity concepts, and for me personally at the moment I'm trading after a sweep of liquidity, and I've tested this with a sweep of liquidity and it does work too. I used to use this entry model back when I traded supply and demand, and it works with supply and demand as well, and that's the beauty of this setup right here. So as you can see on the screen, we've got a little diagram, and let's just assume that the blue bar is a bullish candle and the grey bar is a bearish candle. What you will notice here is we're coming down, we get a bullish candle, but the bullish candle does go ahead and break the low, and I'll show you how you can combat this once we go ahead and show you the concept. Then we go ahead, break that low again, and then obviously your range will be from this high to this low. In this example, what we get is we do get a retracement, so the bullish candle is a true pullback, and then we break the low of this candle right here. So kind of what we're looking at is you first of all want to go and get your GAN box, your fib, whatever you want. Go ahead and get these settings right here. So you need 0, 0.5 and then 1. Once you do that, you're good to go and you're set to start trading this model. So once we come down and we get this bullish candle right here, and then we do get a break of this low, what you will need to do is you'll need to mark your range from the high of this bullish candle to the low of this bearish candle. And then for example, if we get another bullish candle and then a bearish candle that breaks that bullish candle's low, you will just want to move your range down like so. And then what you want to do on this is you want to obviously see where your pullback is, see where the break is, and then you want to mark your range from the bullish candle down to the bearish candle, and it's kind of just like that. So it's really simple, really easy to go ahead and trade. Super mechanical, and it's really easy to get involved. So what we want to do now is we want to wait for a break of this high. So a break of this range high right here. We want to see a return to the 50% and then a continuation, and this is where we would get involved. Again, on this, what we want to see is we want to see a break of the high, a return to the 50%, and then a continuation. So a break of the high, retest, a continuation, and that's where you would get involved, on the charts when you're trading this live. Again, if we go ahead and invert our scale, it's the same kind of thing if we're trading a bearish setup. So what I want to do now is, if I just move this back to, a normal chart, we want to go ahead on the 15-minute and we'll see if we can find any examples right here. So what we want to do is, for me personally, I trade after a sweep of liquidity. If you want to trade this with supply and demand, that's absolutely fine. But in this example right here, I'm going to trade after a sweep of a fractal high, equal highs, equal lows, buy side, sell side liquidity. If you want to go ahead and gather data on it, using supply and demand, that's absolutely fine. If you do that, let me know how it goes, and just, post your results in the comments, do whatever you want. So as you can see, first of all, what I can notice is we do get a take of liquidity above this fractal high right here. It's in our session timings. So my session times personally are from 8 AM till 10 AM GMT, so UK time, London time. And then in the afternoon, I do trade New York session. So I trade from 1 PM until 4 PM in the afternoon for my New York session. So what I'm looking for is I'm looking for a sweep of liquidity, and then I can look to get an entry. On this right here, we're trending sort of bullish, so this kind of is a more riskier trade, but we'll go ahead and look if we could get involved in this anyway. So we get a sweep of this high right here, this fractal high. There will be liquidity resting above these. There's liquidity above hold highs, hold lows, equal highs, equal lows, etc. So what I'll do now is I'll drop down onto replay mode. So now we're on obviously this little section right here, and if we drop down onto our entry time frame, which in this video would be a 1-minute chart, this works pretty much on any time frame that you can imagine. Obviously if you're on a higher time frame, it will take a little bit longer to set up. But one thing I want to mention as well is when we're trading this, my minimum stop loss will be 3 pips, and I want to cover the high by a minimum of 0.5 to 1 pips. You don't want your stop loss smack on the high right here, because you take the risk then of price coming up, sweeping you out and then continuing. So always leave your trade a little bit of a buffer, just to be on the safe side. So what we want to note is we want to know our range before the sweep of the high. So as you can see, we've got these bearish candles, and then the bullish run to sweep this high right here. So our range would be from this low to this high. And then as you can see, super mechanical, we enter at the EQ of the range every single time. You don't have to look for, a decisional, an extreme. You don't have to look for a fair value gap. We enter at the 50% or the EQ of the range every single trade. So that's how easy and mechanical this method is. So what we want to do is we want to enter at the EQ. As you can see, that's a 2.1 pip stop loss. So my minimum is 3 pips. And for me personally, I like to target 1 to 3s, 1 to 5s, but you can target 1 to 10s, 1 to 100s, do whatever you want with this. But what I want to do now is just see where 1 to 5 is. 1 to 5 would be around here, so you're in and out of this trade really, really quick. Let's see how long it takes. So we get triggered there, and we take profit around here. So 43 minutes, you would have made 5R on the 1 minute chart. Super clean, super nice. So back up onto the 15 minute, let's see if we can find any other examples. And hopefully I can find, more of a complex one just to show you kind of, sometimes this doesn't work 100% of the time, which nothing does in trading, but it's really, really simple and really easy to get the hang of. This example right here, you might not take this just for the fact is that there's a lot of momentum to the downside, but as you can see, it does come and take out London low. We could go ahead and have a look, see if we could get an entry here. So we sweep these lows, get the bar replay tool, and then we'll go back and see if we could have got an entry. So drop down onto the 1 minute chart, and then as you can see, our range before the break, before the sweep of the low right here, would have been all the way up here. And then we don't get a break of the high, first we get a break of the low. So all we do now is we just move our range down, and then we move it down to this low. Again, we don't get a break of the high, we get a break of the low. So again, we move the range down. So once we break the low, we will go from here to so what happens here is we get a bearish candle, then a bullish candle, then a break of that bullish candle. So what you want to do is move your range to here, and then as you can see, what happens then is we do get a break above with a wick. So you want to go ahead and gather data whether you're happy to see a wick break or a body break. For me personally, wick breaks are absolutely fine. So what we want to do now is enter at the EQ. As I said before, minimum stop loss is 3 pips, but you want to cover the low or the high by 0.5 to 1 pip. Enter there and see where we could put our stop loss. So 3 pips is there anyway, so we would have been kept into this trade depending on the the spreads of your broker. And then again, target 1 to 3, 1 to 5. 1 to 5 is it quite comfortably. You could have targeted all the way up here if you wanted to do that, but for me personally, I like to be in and out of the market. Super easy, super quick. So 1 to 10 that would be to this buy side liquidity. Really nice trade. It doesn't take long to get there either. So let's go through and we'll see if we can find one more example just to show you. And obviously, if you have any questions, feel free to leave them in the comments. There's a sweep here, but that's not in our session. It's just outside our session, so I wouldn't got involved in that personally. It doesn't fit the plan. So let's just see right here. So we sweep London high. Let's see if there is, an entry. Drop down onto our entry time frame. See our range before the break, and looking at this, it doesn't actually look like there would have been an entry on this one. So our range would be from this low all the way up to this high. As you can see right here, one thing I do want to mention is if we zoom in, we do get a pullback right here, but it's a bullish candle. If that was a bearish candle, we would have then moved our range to this, but because it's a bearish candle, we leave it down here. And then as you can see, we break this, but we don't return to the 50%. So there's no entry for us right here, no entry. So that's absolutely fine. Let's see if we can find another example really quickly. So what we can do is we can look to see if there's an entry on this one. It's in our session timing, so it does fit the plan. Obviously, if there's an entry, drop down to our entry time frame. So as we can see, before the liquidity is taken, our range is up here. So from this bullish candle all the way down to this bearish candle. And then we don't actually break the high until we break the high over here. So we break the high here. And then the EQ of the range would have been right here. So we come back, get tagged in, stop loss below this low by 0.5 or 1 pips. So 5.6 pip stop loss. For me personally, I don't mind that. That's absolutely fine. But you know, if you've got like a maximum pip stop loss size, then you might not want to take this trade. And then we can target 1 to 3, 1 to 5. So let's target 1 to 5 and let's see what happens. Let's go back up to the 15 minute. And do we hit TP? We do finally hit TP. You know, it takes an absolutely long time. You might have, you know, closed out of this trade before the end of the trading day. But overall, like I said, it's not 100%. It's not going to work every single time. But for me, it's a really good one. And it's one that I think will take your trading to the next level. It's super mechanical. You enter at the same point every single trade. Like I said before, you don't need to look for any decisionals, any extremes, you know, any fair value gaps. You just enter at the EQ of the range. So if you do like this entry model, guys, please let me know in the comment section down below. As always, if you have any questions, feel free to drop them down below as well. And without further ado, guys, thank you very much for watching, and I will see you in the next one.